Talk to us about one of your pet peeves, which you've labelled the well-chosen example. I really liked what you sort of said about this in one of your books. So would you mind explaining what is the well-chosen example and why should traders be aware of this?
Yeah, okay, that goes back to the very first time I wrote about that was back in Complete Guide to the Futures Markets, which was done in '84. And basically what I was seeing in the industry when I got into it was, you'd have all these ads for trading systems, right? And they would show you this trading system. They have a chart, and they would. There was like a perfect example would be like you would have a chart, and it was maybe a euro-dollar market or something like that, and the market would be you'd show all these sells and buys, and the sells would be all near the highs, and the buys would be all near the lows, and it looks like, oh, wow, what an incredible system. And it could actually be an actual system that gave you those results. But in that particular case, it would be a counter trend system that you kind of, there was a market that kept on having false breakouts on both sides. And basically, if you use a system that sort of sold the breakouts instead of bought them, you did extremely well during that particular period of time. So you have a system that looks like it's really performing very well, but for that particular example, use the same approach in a trending market, and you'd completely wipe out your account. And actually, the way, as I recall now that you mention it, I remember the thing that really drove this home. It was one day, we had been working on trading systems, and I had a partner that I was working with. And we developed these systems and spent some time on it and whatever. And I wouldn't say they were complicated, they weren't complex, but they were not super simple systems and had some sophistication to it. And then I read this article, and it showed an example of, I think it was a Swiss franc it was, and it showed it over a year or two time, and it made like $37,000 at very small drawdowns, and the signals were just great. And then I ran our system, and we did nowhere near as well. Yeah, our system made money during that period, but nowhere near as well. And I was kind of discouraged. And the system that was described, by the way, this was for a magazine article, right? It was a very simple system. It combined two moving averages. It sort of took something like a 20-day moving average and a 6-day moving average. And when they were both long, you were long, and when they were both short, you were short, and if they disagreed, you were neutral. And I kind of, knew that. Well, we had tested. So, one of the early things we did was test moving averages over, different time periods, and just as a basic, very simple approach. And I knew that, 20-day moving average low, 6-day moving